Robert Kiyosaki recently called Warren Buffett out on his stock investments.
F you, Buffett. You know what I mean? He's good at stocks. No, I mean, he's a very smart guy. He's a multi-billionaire, but he didn't invest his money. He invests your money. I don't need to trust Buffett. That's all I'm saying. That's why Buffett, no doubt he's a billionaire and all that. You and I cannot start insurance companies. I doubt we could.
So Kiyosaki is the author of Rich Dad, Poor Dad, one of the most popular finance books in the world. You might have read it. And the criticism is that everyday people cannot start insurance companies. What I think is, well, doesn't matter. Everyday people still need to know where to invest their money. The stock market, it's a great place to invest money for long-term wealth. But Kiyosaki, he says, well, it's not going to make you rich. And if it does, it will take at least 30, 40, 50 years to do so. He's absolutely right on this. If you don't want to wait, then Kiyosaki's strategies of real estate, debt, entrepreneurship, they come in handy. But on top of this, Kiyosaki, he just doesn't have much faith in the stock market.
I don't touch stocks, that's why.
Okay, so you're just anti-stocks altogether.
Well, I don't know if you just read Buffett's last report. He says what's happening to our CEOs, they're lying. Why would I trust a CEO which I don't trust them anyway? So just look at his last report. Another thing that's happening, just FYI, is the Fed is printing all this money, but also what happened is the FDIC, Federal Deposit Insurance Corporation, is now terrified there's going to be a run on the banks. In other words, people are this is 2023. They're so afraid that there's not enough money, they're going to start yanking the monies out of the banks. So at that point, watch what happens. Look at the stock market. It's crashing like a rock today. You know, there's three basic asset classes. Just look at the facts. Don't listen to me. Stock market is going down, real estate's going down, and cash is going down. And so this here is a 1964 silver dollars, Kennedy on it. 1964, it was a guy named, Johnson, I think, took silver out of these coins here. So this little silver coin today is worth $10. I can go to any coin dealer and change it for $10. So F you, Buffett.
Okay, so he doesn't like stocks, he doesn't trust CEOs, and it is true that a lot of CEOs are not trustworthy. Buffett has talked about this before, where CEOs just care about themselves and their own bonuses. Buffett said, I was at a company that made about 8 acquisitions, none of which worked out, and they could hardly wait to do the 9th. Why were they so eager to keep making acquisitions even though the previous 8 failed? Because they get their bonuses. Even though the acquisition went bad, they don't care as long as they get that money. So yes, a lot of CEOs lie, which is why it's so important to get an honest one. As Buffett said, picking the right CEO is 10 times more important than the compensation. Unfortunately, with Kiyosaki, it seems that he's had bad experiences with CEOs before.
Yeah, and the trouble with, if you do a mission and you cheat, lie, and steal, like a lot of my CFOs and CEOs did, they didn't get my mission. Their mission was to take my money.
So a former CFO of Kiyosaki's once stole $100,000 from him, and this burns his trust with other people managing his investments. Hence, he doesn't like stocks because CEOs and managers are in charge of your business.
I never invest in stocks. I don't trust the stock. I don't trust the stock market. You can. I'm not saying don't do it. I just don't trust them.
Yeah.
So I like real estate because I'm the investor. I don't need to trust anybody else.
Right.
And so I'm not saying it's wrong, but I don't have a 401k. I don't save money, and I don't invest in the stock market. I am an entrepreneur. I can create my own assets.
So obviously I disagree with Kiyosaki on stocks, but with entrepreneurship, I agree 100%. Create a business if you want to become rich. If you want to grow your money slowly, invest in stocks, let it compound. But if you want to grow wealth quicker, create your own company. Just like Buffett created Berkshire, Bezos created Amazon, or Walton created Walmart. So Kiyosaki hates stocks, but he likes gold and silver. He keeps a lot of his wealth in these assets. Warren Buffett, though, loves stocks and he hates gold.
Berkshire versus gold. You want to talk about how that's performed over the years?
Yeah, but we can go beyond that. But certainly, when we took over Berkshire, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce. And gold is now $1,600, and Berkshire's $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now, you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it, all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, in any given 1 year period, 5 year period, any asset can outperform another asset. Tulips.
Why don't you join me?
With land, you can get somebody else to do all the work, give them a percentage of the crop, and you can sit back there for 100 years and get a percentage of the crop, and you still got the land when you get all through. I will guarantee you that farmland over 100 years is going to be gold, and so are equities. Yeah, it's very interesting. If you go on CNBC and say that bonds are kind of a poor investment, people don't get mad at you. You don't even hear from the Treasury. I mean, you can knock almost any investment, and people may get a little irritated. But when you talk about gold, and of course that says something about their motivations for ownership. They want people to agree with them. They want everybody to get so scared they run to a cave with gold. And caves might be a better investment than gold. I mean, at least they're not producing more caves all the time.
Warren Buffett was just so quick and sharp back in the day. He used to spit out facts just like that. In the short term, 1 to 5 years, anything can happen with assets. Just look at what happened with the crypto craze, look at how stocks can crash, look at the stock tech bubble in 1999. But in the long term, stocks beat gold. If you go back 50 years, 80 years, 100 years, stocks have outperformed gold. The S&P 500 and the Dow Jones Index funds easily beats the price of gold and silver. The reason, as Buffett said, is because stocks, aka businesses, produce something. They make money, they produce earnings, they sell products. And gold produces nothing. I don't think that gold is a bad investment to hold and guard against the Fed's massive money printing. It's certainly better than just holding cash, which just goes down over the long term. But stocks are better.